India's Chief Economic Advisor, Mr. Nageswaran, has said that the government is not alarmed by what's happening on the currency. He says not losing any sleep over it. He's spoken about how the currency has been largely stable over the last 2 years and saying that the weakness is not yet translated into higher inflation or hurt export competitiveness. So he's not sounding too concerned right now. He does talk about the global backdrop in terms of rising US interest rates, geopolitical strains, tighter financial conditions, saying that it's really against this backdrop that the fall must be seen, and it's been relatively stable against many of the other emerging market currencies over the last 2 to 3 years. Conditions are only set to improve going forward in 2026. The rupee is slipping about 5% this year so far, also today crossing that 90 rupee mark, and that's really what was troubling everyone when we saw the kind of pressure that was building up on the currency this morning. And what's happening on the rupee, we've talked about how it's been in free fall as well as the CEA's commentary on the currency. Let me also welcome in, we've got a guest joining us on the rupee just to talk us through the outlook as well. And Mr. Mathur, just to get a perspective from you, we've crossed 90, which was anticipated. But how much further do you anticipate we could see pressure building on the currency? And is it likely that perhaps any commentary from the RBI coming in on Friday will help to stem the fall? Or do you see this as being a trend that will accelerate over the next few weeks?
Thank you very much, Aabha. Pleasure joining in. And thank you very much for inviting us to share our views. I wouldn't say it's a free fall, but yes, over the last few months, we did saw rupee depreciating from levels of around 83, 82 a year back to around 88, 87 levels against the US dollar. It got stabilized at around 88, 89 Aabha against the dollar. But over the last 2 days, it has plunged or depreciated against the dollar. So we did saw a plunge of around 1% last week. And we also witnessed an all-time low for the rupee against the dollar today. So rupee did touch briefly around 90.29 against the dollar, currently at around 90.10, 90.11. Now, the fundamental reasons for India are very strong. You have the very good GDP numbers coming in from the last 6 months, the first and the second quarter. I think the pressure is largely with respect to the uncertainty which is still mounting on the tariff with the US, the tariff policy with the US, the strong dollar, and there is a safe haven buying in the dollar too. So people are therefore, the dollar is appreciating. It is around 99.15 where it is stabilizing currently. Fears of the wider trade deficit because of the depreciative rupee against the dollar. So imports would be much more costlier, and you don't have too many exports coming in with the global economy still coming out of the tariff shock. So I think all these fundamental factors which are positive for India per se would play in short term, but not on the immediate term because of the pressure which is bound to come with respect to the trade deficit and at the same time the dollar strength. And tariff definitely is one of the concerning issues.
So do we expect the RBI to intervene to support the currency? Mr. Mathur, is that something that the street's watching out for? Because they don't, at least the CEA right now is sounding fairly unperturbed. Will the RBI step in at this point, or do you think they'll wait and watch further?
See, the RBI monetary policy is supposed to happen. I mean, the 5th of December would be the outcome coming in from the monetary policy. Although the large probability or the assumption around the markets going in that the RBI would cut rates. Now, I am not sure whether that would happen in this particular policy meeting, because if the RBI cut rates, then the rupee might further depreciate against the dollar, which would again be a painstaking job for the RBI to manage. At the same time, I would say that the RBI is getting into kind of what International Monetary Fund has just come out with, a kind of a note saying that it is guiding and not guided by or guarding against the rupee against the dollar. So I think the RBI would take a very cautious call because the fundamentals for the country are better. The inflation is very much tucked in. You don't have the GDP questions mounting on. The manufacturing sector, the services sector is doing well, except for the exports, which might be critical going forward with respect to the services sector. So I think it's a very tough call for RBI, but I'm sure 90 is something where RBI would be watching the rupee against the dollar. And I don't think my personal view is that the rupee might not depreciate further beyond 91. As we stand today, tomorrow the situation can be a different situation.